Hello, ladies and gentlemen, and welcome to our risk management show. In this episode, we are talking with John McMahon, Collections and Recoveries Thought Leader at FICO. Our guest today has committed the last 25 years of his career to collections and recoveries, where he is now recognized as a key thought leader. He has led many successful cultural and technical transformation journeys for a number of key clients, including Commonwealth Bank of Australia, Barclays, and MBNA. Throughout his career, he has worked at over 40 different financial institutions across more than 30 countries and developed in-country cultural knowledge from the time living in the UK, Spain, and Australia. More recently, he was inspirational in developing new change methodologies, focusing on appreciative inquiry, lean, agile delivery across Barclays within UK, Iberia, South Africa, and US. John, welcome to our show today.
Thank you, Boris. I'm really excited to be here, so I'm looking forward to hopefully sharing some really great insight.
I really appreciate your time and look forward to our conversation. John, could you tell us a short story about FICO and what are you guys up to these days?
Yeah, okay. So we're really helping our clients, let's say, develop their vision and transformation across collections and recoveries. We obviously have analytics at our heartbeat. You know, the company was founded by analytical guys that have developed some fantastic models that are driving many different scenarios across the credit life cycle globally. And if we focus in on collections and credit risk, collections and recoveries that we're going to do today, we have a number of different tools and products and services where we help global clients virtually in every country around the world to focus in on their debt recovery and to really drive fantastic customer outcomes. You know, we've developed our product suite over the last number of years to really enhance the different parts of what I would call a CNR landscape. And if you think of those building blocks of a landscape and a journey that you should have across collections, it would contain, you know, your data insights and analytics. It would have things there where you can really focus in on your strategies and develop your strategies further. And at the heartbeat of it, you would have some sort of collections and recovery system. And be able to communicate with your customers through an omni-channel platform. So through FICO, we've developed this CNR landscape over the last number of years where we take the insight that we see from our clients and help other clients build that out.
All right. So how are you different from other providers in the space? And what specifically are you doing in collections and recovery space?
Okay, the difference is, I would say, is FICO have really taken a fantastic stance around thought leadership and really started to attract, let's say, market experts to come into the organization who've lived and breathed the same as our clients. You know, we've walked in our clients' shoes. We understand our clients' challenges. You know, they've very complex matrix organizations that they work in, from the major financial institutions through to, you know, the telcos and the utilities and the government organizations that we work with, and also the global DCAs. And we understand how our clients feel, and we understand what they're moving through within their transformational journeys. So FICO is really taking a step of around thought leadership, which is a great insight to really help our clients. So they've invested in people like myself and allow me to work across our strategic clients across EMEA, Europe, Middle East, and Africa, and allow me to work with the senior leaders in those organizations. I get the privilege to work alongside these leaders to really help and transform their businesses. So that step that some other organizations don't do, FICO do that really, really well. And we're seeing the fantastic response from our clients accordingly. You know, we get to work with our clients over a number of years to really establish what they need. And sometimes that involves FICO's products and services, and sometimes it doesn't. It involves our thought leadership and our experience that allows our clients then to develop and really drive value back into their shareholders and enhance that customer journey that they're really focused on. And underpinned by that experience is obviously our product suite. And even if I think of our small team, that we have in collections and recoveries in EMEA, the experience across those 9 or 10 people runs into the hundreds of years, whether that is focused on the technology. We've got experts that drive out our debt manager platform, that know the platform literally inside out. And not only know the platform, have actually implemented that platform in many different organizations, which is phenomenal. We've then got other guys in the team that really focus in on, say, the technical aspects of collections and the technical aspects of the technology, and really understand not just how to implement it, but how to ensure that you get the best out of that piece of software that you've just bought. And then there's another guy like myself who works alongside the senior leaders in the organization. So that breadth of knowledge runs into the hundreds of years, just in quite a small team to enable our clients to be better, to drive better value.
Fantastic. And what changes are you seeing in the market, especially now in the COVID era? Can you tell us how your clients are impacted by the crisis and what organizations will need to do in order to adapt?
Yeah, it's a great question, Boris. Thank you. Do you know what's really interesting is I'm very passionate about collections and recoveries, and it's been part of my career for such a long time. And I think if we're all honest within the collections and recovery sector, we've probably been lagging behind other parts of the credit life cycle. So, there's some great examples where some organizations, I'm a Starling Bank customer, and you can open a bank account at Starling with a fingerprint and a selfie. It's phenomenal. And you've got a line of credit within 2 minutes, all these things that are just absolutely brilliant. And in collections, we've still got a lot of organizations that, have really basic segmentation and send a letter and still use a dialer, to do that. And it's really been far behind as a sector. Now, what we've seen from COVID is a phenomenal change and a shift, I would say, in 4 key areas that I've seen, and I've been working across our senior clients in the last, well, it's nearly 6 months now, Boris. That's crazy, isn't it? In the last 6 months, and I would say there's 4 key items. The first one that I've seen is the real focus on digital collections. Now, this is where, if we're all honest within the sector, I could probably count on one hand the number of clients globally that really do drive digital collections to the next level. I'm talking about they've got app first information. They're using the self-service channels that they've got. They're making use of things like open banking and driving that data, and they've got all those avenues open across all their channels, like website, through the app, through SMS, through two-way SMSs, through video messaging. They're doing that on a consistent basis and driving to the next agenda, literally one or two or three on one hand. So what's happened through COVID is obviously the huge demand that's been put on operational areas that blew them out the water. We're talking about clients that are receiving a month's worth of calls in a day. And the demand from when the regulator makes changes, or sorry, the chancellor made changes and announced them within 24 hours, that the banks had to react, and they were just inundated from a supply perspective. And at the same time, their operations were not allowed into the buildings, being how to set up themselves working from home that they'd never done before. So again, from a personal point of view, working in a call center and all of a sudden you're working from home, the banks had to, or the financial services or creditors had to understand how they were going to work with their individual operators. And from a cultural point of view, that's really difficult to sort of manage. So the scenario presented itself with that the sector had to move more into digital collections, and we're seeing the demand now of how that can work. So that was a real big one, and it's starting to change the sector for the better. And FICO have driven out a great partnership with an open bank provider called OpenWrks, and they're market leading in the UK right now, and soon to be further afield as well, where we'll really focus on the utilization of open banking. And what that does is it creates an app, and the app is really cool. It's called My Budget, and it drives out an affordability assessment for the customer utilizing open banking that is fully integrated across FICO's credit suite into Debt Manager. So between the collector and the customer, they get a fantastic journey. that takes probably about 5 to 10 minutes. And if you take that phone call and put that phone call into an operation, that takes about 45 minutes to an hour. So a significant saving for the credit issuer, and a much better journey for the customer. So we've seen these things start to come to life, which has been great. So that's one. Two is then, if you think about the digital collections, it's the focus on the agility to change at pace. Again, things were forced upon the creditors through COVID, and with the Chancellor standing up in the UK and making these changes on a daily basis, the banks had to change, and the financial services and the utilities and the telcos and the car leasing organisations, they had to change literally within 24 hours. And what that's done is it's really put a focus on collections change, from the senior table, right up at the board level. I've really started to focus in on how we can change collections for the better, because unfortunately, a lot across, I would say, of upwards of 80% of the organizations we work with, they have huge legacy platforms. And these legacy platforms aren't available to change quickly. There's a smaller percentage who have moved away from that and really focused in on cloud-based solutions that allow very simple changes to be done by the business and the business team. And FICO's Debt Manager supports that. And within that platform, those organizations that have done that and really made those changes were at the forefront of being able to handle what their customers need. And when the customers are demanding different changes, then the bank or the financial services creditor issuer, credit grantor had to be available to make those changes rapidly. And there's different scenarios to do that. So there's two. The third one is absolutely the focus on the customer. That's never changed across many organizations and many countries across our region. The customer being at the forefront of the issuer's mind, to be able to make the right decision to drive the right outcome for that individual customer. And what's fantastic about that is it's great to be able to stand up in front of a sector of collections and recoveries. And sometimes people think, we're the bad guys here and there. But it's unbelievable when you see the focus on the customer through collections and how they drive brilliant outcomes to ensure that the customer is getting the right satisfaction and the right service. And if you go across some of the organizations I work with, the NPS, or the Net Promoter Score, is actually one of the key drivers in collections. And I challenge an awful lot of people within say, a banking organization, that collections is normally the number one in NPS, because you're really driving an emotional connection with the customer and helping that customer through their unfortunate journey that they're in. And FICO's products within Debt Manager and CCS, our collections communications service, allows better outcomes to be driven for the customer to get the right outcome. And then the last one is collections analytics. Again, if you look at digital collections, and in the past, who was good at that? How many people, how many credit issuers have I come across that are leading the way in collections analytics and optimization? Again, probably limited, to be fair, and that shouldn't be the case. If you move into the DCA world, some of those guys are fantastic at driving out sort of revenue models and cost per collected models, and they're fantastic at that. Some of the other issuers across the utilities and the telcos and into the financial services probably have that high, medium, low risk models that everyone's had for the last 25 years. But are they really driving optimization? And through COVID, we're starting to see a big switch in that as well. And this is the fourth element of it. And what we're seeing is, because of the volumes and demands, the operations can't handle it, even if they have got the digital collections in place. So they've got to be able to identify the customers who are going to be at risk moving through collections in the next few months, comparable to the ones that aren't. And also then understanding that the customers coming through from COVID aren't standard collections customers. No, they've probably never been in arrears before. And we saw this back in 2008 after the global financial crisis. These are good customers who were just falling on hard times and unbelievable circumstance. They might have lost their job or whatever it is being involved. What's been the compelling event for them to move into collections can be quite varied. And having the analytical models to be able to segment these customers and take different actions on them is absolutely imperative for the credit issuer to ensure that they're driving out the right outcome for the customer. So those four key things, Boris: the agile to change at pace, digital collections analytics, and absolutely the focus on the customer.
Mm-hmm. I believe also there is a lot, have been a lot of payment holidays granted due to the various COVID relief programs. And what is the impact on financial organization, and what tools do they have to handle this?
Yeah, it's an interesting one, isn't it? Payment deferrals or payment holidays has been that big thing that's been mentioned right across the globe. I think virtually every country that we've got information for brought in the payment deferrals, and the organisations had to change quickly. It's an interesting one because putting the customer at the heartbeat of this is the interest was still being accrued on the accounts, and in some cases, from a collections point of view, that may increase their balances. And we've seen some organisations around the globe. In South Africa, there's a great one in Capitec that has actually refunded that interest to the customer. And again, think about that, really putting the customer at the heartbeat and proving that the customer is at the forefront of that decision has been a phenomenal move, especially in that marketplace. And when you look at the deferrals that were put in place really quickly, what we're starting to see now is different cycles of customers that are rolling off those payment deferrals, and we're seeing some results coming out. And Lloyd's, HSBC, and Barclays in the UK have produced some really interesting half-year stats, and they're out recently. You can see that a number of these payment deferrals are back on normal payments, which is great. But a lot of them are rolling them further and rolling them out. In the UK, you can extend them to the 31st of October, and they're starting to extend those out now. Because the market and the stability of the market isn't quite there. So we're starting to see that movement. And what that's doing is it's obviously building a stockpile of accounts that aren't quite in collections yet, that are a higher risk and are going to need some attention, and to ensure that that customer is on the right solution for that individual customer. And obviously all the customers' needs and financial impacts are different. So the payment deferral is quite a generic tool to use. However, what we're starting to see now is the major organizations reviewing those payment deferrals to ensure that that customer is on the right solution. And that's really interesting. But we've seen a different response from many different marketplaces, especially because there were huge volumes involved. And setting these payment deferrals up and payment holidays up on the accounts, and it really fell into most of the back office organizations within collections. And we've seen that manual increase of manual demand go through the roof, with significant volumes of additional people being called in. I'm seeing some numbers floating around anywhere between we need an extra 400 FTE to we need an extra 2,500 FTE, which are just mind-blowing numbers when you think about the collections operations globally, of how many people that is, and the cost of those people being pulled in is absolutely significant. We're talking about increasing your cost base by upwards of £100 million, which again, you can't get your mind around that to say, is that going to be the demand? We're not sure yet, and we're not sure. And the way to sort of move forward from that is to ensuring that you have got those four things in place, actually, that I've just mentioned. The digital collection, be able to take that volume away, so you don't have to go out and recruit those bums on seats. You've got the analytics to really drive the right outcomes, and you can do that at pace to focus on the right customer satisfaction as well. So yeah, it's been a really interesting time, Boris.
All right. Fantastic. I'd like to ask you a personal opinion. What is a
Go for
commonly
it.
held belief as it relates to collection and recoveries that you are passionately disagree with?
Say that again, Boris. What was the first bit?
What is the commonly held belief as it
Okay.
relates to the collections and recoveries that you are passionately disagree with?
Do you know what? I think I've just touched on it. It's the focus on the customer. Yeah, absolutely. That a lot of people have a perception of the marketplace, whether that is from a financial services through to DCAs through to debt purchases, any of that space, where let's say over, I would say 10 or 15 years ago, the focus was about collecting money, right? And it was absolutely that focus, and the drive and the behaviors that drove at the time probably created an unfair perception of the marketplace, if I call it that. In the last 10 or 15 years, the whole industry and the sector has changed massively, with the customer being at the forefront of every decision that the organizations make, the credit issuer makes. we see slogans like it's our ambition to keep people in their houses, and so repossessing someone's home through collections and through non-payment is probably the most emotional um, thing that you could do to an individual human, um, really based on that emphasis. And what we see is we see organizations with visions about keeping customers in their homes. If it's in car leasing, to ensure that we keep the customer in the car is at the forefront of what they do. That wouldn't have been the same 10 or 15 years ago, but now it's the focus really is on the customer to ensure that customers getting the right service and satisfaction and achieving the right outcomes. It is absolutely balanced because we are still in collections about ensuring that we collect some money and ensuring that our good customers can still get a fair price. You've got to have that balance out. But when you work across the utilities, and some of these guys are doing phenomenal things, where in the UK, as a great example, water is deemed as an essential service by the government. So the service, it can never be cut off. So the utilities, when you work with these guys that are doing unbelievable things from a customer point of view, to really focus on the customer, to get the customer paying, to ensure that a customer carries on making payments, but they're doing everything in the right way. Whereas years ago they would have disconnected the supply, but they can't do that anymore. So they're hamstrung by doing that. But what they've done to make it more effective is offer fantastic customer service. And what you see is the customers then start paying. So that switch in mindset across the last 10 or 15 years from the credit issuer through into the marketplace, through from a regulatory point of view, has been absolutely on the customer. So I would disagree with someone that says in collections you can't offer great customer service. I think you offer the best customer service across the credit life cycle because you're really attaching to a customer emotionally as well as through their financial means.
That's a great point. I remember I used to be a risk consultant, as I told you before, and I remember working on a debtor management system about 20 years ago for a large automotive company. So, for example, what tips do you have for risk managers to help their organizations to stay on the course during this crisis? For example, what's something that they should start doing right now that they are not doing, or another way around, what they should stop doing and what they are not doing? Something like this.
Okay, Boris, that's okay, no problem. What's interesting about that is what they should start doing, and I'm hoping they've started to do this already, is capture the data, especially from a COVID point of view, to really understand the customers that are being put on these payment deferrals and understand how that customer is actually made up. So when you're having the conversation with the customer right at the front end, why do you need the payment deferral? Have you been furloughed in the UK that we're calling it? What is your actual job role at the moment? And, what is your actual annual salary? Having those conversations with the customer, because that is going to be so important for you to start to understand as the customer rolls through a timeline, not through in collections, just a timeline of being on the payment deferral and before they actually roll into collections, if they do. Because it's really important to understand the makeup of that customer and have that opportunity to do that. So absolutely start capturing the data when you have that conversation, and whether you've created that payment deferral online, through some sort of web form or through a conversation, however you've done it, to ensure that you're capturing that data is absolutely important. Especially then when you think about if that customer is then to roll into collections, what sort of risk are they? How are you going to assess that risk when you've never really had this grouping of customers come in before? And we're going to start seeing that more from an analytical point of view. So understanding that the organizations are already starting to adjust their models, because the models that they've got in place today haven't ever seen the volumes that we're going to start to see coming through, but they haven't seen the profile of these customers coming through before as well, unless some organization has still got a model in place from 2008, which could be typical of the market. But it'd be interesting to understand how they're going to do that, because the profile of these customers and are as dramatically different to what we've seen before. So start doing collecting the data, understanding that what that makeup is and the profile of those customers that are coming through. I would say stop doing, and this is really understanding where you are today, because when people say we're moving into this big crisis that is coming up with the volumes that we're going to get through, we've already spoken to a number of leaders who've said things like, "Do you know what, John? I wish we'd made these changes 2 years ago now, and we didn't, and we wish we had gone on that transformation that we should have done." So stop doing. I would say it sounds a crazy one, but stop being the stop guy, and stopping the transformations that are going on in collections. Let's stop doing that. Because these transformations that we would have seen, if these organizations would have made these changes a couple of years ago, they would have the levers to pull in the operation right now that they haven't got. They would have, the end-to-end customer landscape built out that they haven't got. Instead of trying to build things themselves and utilize vendors to be able to bring their expertise to the table. Many organizations that I've worked with have said, it's okay, we're okay. Or actually, I've worked at myself who have said, no, it's okay, we're going to build this out ourselves. But you're a bank or you're a utility. You're not a software expert, but you are going to build out your own collection system. Yeah, okay, and they've started to do that. And then what we've seen is a number of those organizations never get there, and they move into this complex world of an environment where they haven't been able to build out that collection system, and they're still in that position 5-10 years later with God knows how much money they've spent in that time frame. So stop being the stop guy and really focus in on the transformation in collections, and utilize the vendors that are in the marketplace, that are the marketplace experts, to be able to help you with that and ensure that they become a partner and they don't become a vendor.
Absolutely fantastic. And I just wanted to mention that FICO has its own user community, which is located on a site, and I will mention we will mention it in the show notes for this interview, and also on our website. What should we expect from you guys in the future with what are going on in your industry? What are the major trends you can summarize for in a few words?
Okay, so you mentioned something, Boris, that is quite close to my heart. Being as a thought leader, it's great to share that insight, and you need a vehicle to do that. You need a vehicle to be able to do that. So we've created this community, Collections and Recoveries group. It's a great idea by a guy that works for us, Charles, and he's come out with this fantastic initiative to really drive collateral into a group where people can gain access to. And it's not a salesy thing. It's absolutely thought leadership, and it's absolutely insightful from what we're seeing across other clients, what we're seeing in the marketplace, and it'll drive fantastic conversations between leaders, and obviously similar to what you guys are doing. And we pulled together this partnership to really ensure that our clients can see case studies and understand product information, and they can see the latest future versions of technology, software, and issues and insights within the market. So our insights and development of that will go into that group, and it's been developed now over the last sort of 18 months, and we're seeing some fantastic uplift in that. So I would ensure that people, getting access to that and really have a look at what some of that insightful information is from some of the leaders across FICO.
Great. So summarizing, if someone who is listening to this interview would like to walk away with one or two major takeaways, what would it be?
Okay. Focus in on your transformation. Really think about what your vision is going to be. And a wise man said to me a long time ago, you can underachieve what you think you can do in 5 years, but you can overachieve what you can think you can do in 3. And really focus in on really focused effort to get somewhere within collections transformation. Focus in on your analytical mindset and really let's start to change the business areas focusing on analytics. Develop your digital collections and ensure that you've got a platform in place that can make changes at pace that can be driven by the business and not by IT.
All right. Thank you. Thank you, John. It was a fantastic interview. I wish you great success with driving this thought leadership in your company, and hope as a personal, I see you have Liverpool fans, and wish you great success in your journey on Champions Leagues.
That's right, Boris. We can't get much better than what we've had this year. Over the last couple of years, it's been phenomenal. So yeah, let's just hope that success continues.
Okay. Yeah. Bye-bye.
See you, mate.